Going to have our next presenter from Modax Box. Please allow me to introduce the biography of Mr. Steve Haley. Steve Haley has been leading diverse mission-driven teams for 18 years in 9 different countries, between work in the government, non-profit and private sector in Europe, the Middle East and Southeast Asia, leading teams at as large as 350 people. His work has varied from venture investing to humanitarian assistance to digital finance, product management. His focus motorsports in digital finance is helping governments and financial institutions in transitional environments build partnerships, strategy, funding, and products to better serve low-income clients. Steve holds a bachelor's degree in applied mathematics from West Point and a master's in theoretical mathematics from the University of Padua. I would like to invite Mr. Steve Haley to provide his sharing of services for industry-wide transformation.
All right, thank you so much for the introduction. Please let me know if you can't hear me well. I've got 2 connections just in case this one goes down. So hi everyone, my name is, so you can go back 1 slide, actually keep on the first slide. So my name is Steve Haley. I work for a company called Motorsports. We're a software firm that's driving financial inclusion through interoperable payments, and both by enabling local financial institutions themselves, but also real-time payment networks of financial institutions. So I would like to thank Uni and the entire TechsWorks team, Cameron and the Musoni team for having this event. This is amazing. As everyone who knows me knows, I'm a big fan of industry collaboration, and this event is a great sign of that happening. So like Nee spoke about, what makes a digital MFI is actually 4 components. And I'm going to talk about payments, which is just 1 component. All the other components are critical. And payments by nature is a network game, which means it doesn't make sense for a single provider to talk to a single provider. It should be something that we call the collaboration space, not the competition space of microfinance. Microfinance makes money by lending. And anything that's not that should be something you should collaborate on to reduce costs. And so that's what we're going to talk about here. And again, because like Cameron mentioned, digitization is not cheap. It's definitely not free. And so where we can decide that we want to share resources to bring down the overall cost to the industry, we should do so, particularly in such a great collaborative industry like microfinance, and particularly in Myanmar. And so that's what our project is going to talk about, a project we're doing together with FinTechs and UNCDF about how microfinance institutions can share resources. So please stay on this slide. First, I'd like to talk about what are real-time payments. I'll talk about this very quickly though, but most of you have experienced something like Wave Money or M-Paisan or MPT Pay, where you can send money from one wallet to another wallet and the money gets there instantaneously. And the other person can then cash out the money at any time and can make a payment using that money, but the money gets to the recipient instantaneously. When we talk about real-time payment networks, we mean that that happens from any account at any institution to any account at any other institution. And that's where it's different, instead of having these silos of individual institutions. So some great examples of that are faster payments in the UK, Fast in Singapore, Prompt Pay in Thailand. And where I live now in India, we have something called UPI. And as an example, UPI has included over 300 million more people in the financial market than were there before, 300 million people. And every month, there are now over 2 billion transactions per month. Now that's more than all of the telco-led mobile money across the entire continent of Africa. And they did it in 2 years instead of 15 years since the launch of mobile money. And so that's just to give you an idea of when industries collaborate and come up with shared services, you can get free services down to clients, to many more clients much quicker. Next slide, please. And so in our project, we've decided to use a technology called Mojaloop as one of the key parts of the technology stack for this integration platform. Mojaloop is an open source project of the Gates Foundation, Coil, Omidyar, Ripple, PhonePe, and Modusbox, as well as Rockefeller Foundation and others. And so it's an open source technology designed to give countries and industries a locally owned and locally operated, locally controlled, secure and safe real-time payment network. And it can be faster and cheaper built than, or faster and cheaper than a locally built solution. And it was particularly designed from the ground up to provide equal access to banks and non-banks, such as mobile money and MFIs. Most core switching softwares were actually built specifically for bank needs. And so what we've done is we've created something that serves non-banks like microfinance. All right, next slide. Now, one of the biggest ways that we want to drive financial inclusion is by expanding the number of the institutions that provide financial inclusion, the ones that have an explicit social mission, namely, in this case, microfinance. Globally, microfinance serves hundreds of millions of clients. And actually, I think it's a lot more than the number we've got here, 140. But particularly, I want to focus on small and micro enterprises, which are the primary clients of microfinance institutions. MFIs could either be leading the digitization of micro enterprises the world over, but particularly in Myanmar, or microfinance could be left behind as collaborations between fintechs and banks overtake them and allow them to provide credit services to micro enterprises directly. And I think most people agree that that's not necessarily a good thing, because we want credit to be offered by socially driven institutions. So in Myanmar alone, there are over 5, and I've heard 10 MFI clients, and that's growing at about 20% per year, with the vast majority of them being micro enterprises. And so that's where we have a massive opportunity to digitize an undigitized part of the economy. All right. So next slide, please. So our vision, and Modusbox, UNCDF, and the Mojaloop Foundation members, including Google, are working to solve this problem of digitizing microfinance institutions with a project in Myanmar. And we've chosen ThitsWorks as our partner to work with. Our vision is to create greater financial inclusion by enabling microfinance institutions to offer their clients secure, low cost, and reliable real-time payments through regulated payment providers. So the MFIs are not providing payments themselves, and nor is the core switch providing payments. It is the regulated institutions that are providing the payments. Now, one of the best ways we can expand financial inclusion is, again, like I said, supporting microfinance institutions. So we're also planning on using Myanmar as an example, and this is through the Mojaloop Foundation members and UNCDF, as what a digital economy, an inclusive digital economy could look like by empowering microfinance, with already about 10 countries watching what Myanmar does, thinking this is what they'd like to do next. It's an amazing opportunity that we have for Myanmar to be the model microfinance industry. Next. So the problem that we have is that around the world, MFIs are still really trying to understand how to work with this new innovation called mobile money. And mostly they do it through bilateral connections. But I hate to say it, the innovation of mobile money is no longer new. It was 15 years ago, and MFIs trying to catch up of how do we integrate with mobile money are already late. The new thing that's coming to most countries around the world is real-time payments, and that's what MFIs need to start preparing for. And the bilaterals don't work very well anyway. Each integration is costly and insecure. Reconciliation is often done manually through Excel and emails, and which is highly insecure. Settlement is usually delayed by at least 3 days, and sometimes we're hearing up to 10 days to delay settlement. Dispute processes are often largely ad hoc across different MFIs and mobile money, leading to massive customer confusion. So not only does each connection cost more and provide a worse experience for clients, but MFIs have to do it differently with each bank and each mobile money provider. So basically, MFIs who are already serving the poor, already at razor thin margins, who already have less experience with payments, have to pay more to get the same thing than other institutions, because they're just not invited to the payment network. And so let's just look at that problem I talked about with settlement. 3 to 5 day delayed settlement of transactions. If we get to scale, actually, let me back up a second. When we talk about all of these problems, a lot of the MFIs are working with, like I said, individual institutions like Wave Money or Ongo or MPT Pay. But no one's really going beyond a couple hundred transactions per day. Now, doing manual settlement and reconciliation over email is possible at a couple hundred transactions a day. It's painful, but it's possible. But the microfinance industry in Myanmar should be doing up to 10 million transactions per month. And so how is that number going to be possible with all of these manual processes? It's just not. And in particular, settlement. If you think about how much money in the microfinance industry is tied up in settlement, if there's a delay of 3 to 5 days, we're talking about lost revenue for the industry of millions of dollars of lost revenue. But that's not even the most important thing. We're talking about tens, if not hundreds of billions of kyat that should be given to microenterprises to grow their businesses and to grow the entire economy of Myanmar. And instead it's being wrapped up in settlement processes. And that's what we're really trying to solve, is how can we unlock more capital that's going to drive growth of the economy through microenterprises. And the bottom line is the only way we can really make that work is through collaboration at an industry level. This is an industry problem that can only be solved at an industry level. All right, so how do we solve this problem? Next slide, please. The first thing, sorry, go back one slide. Oh, no, sorry, forward on this one slide, that was the wrong order. I apologize for the confusion. And there you are, perfect. So how do we solve this problem? We do it by acknowledging that the bilateral problem is the same throughout. And so what we need is a central platform to manage these payments and these integrations efficiently and securely. MFI should only have to do one integration, one settlement, and it should be the same day, one dispute process, and theoretically, and preferably also one product, which makes it easier to explain to customers, easier to manage disputes. And those are the only way that we're going to get loan repayments, loan disbursements, and other digital products to scale across the industry. Now, ideally, MFIs will be invited to join the national payment system when it's ready. And that's eventually the goal of this project, is that MFIs can demonstrate that they're ready to do that. But as we know, it's very often that they will be left out. And as we've seen with the credit bureau, it doesn't necessarily focus on the problem that MFIs are facing today. And this is why we have MCIX. And so what this project is trying to do is not recreate a new national payment system, but solve a problem that MFIs are having today that maybe the national infrastructure will solve when it's ready, 5 to 10 years from now. But that doesn't doesn't change the fact that the MFIs have that problem today. So why does it say industry owned? That's critical. Industry owned because most of these costs are relatively fixed. And so the more MFIs join, the more transactions go through the system, the lower the actual cost per MFI, and then ideally the lower the cost per institution or per client than if everyone was working on individual bilaterals. The biggest reason, though, is that the MFI industry, with 5 and soon 10, if not already there, clients, 10 million clients, is the collective bargaining power of the industry. If you each try to go to all of these banks and mobile money companies separately, you're not going to get the pricing and the rules that you're looking for. Okay, so that is our proposed project, is a common shared infrastructure for integration among the entire MFI industry. Okay, yes, thank you. Now, building a payment system or an integration platform like this is a very complicated thing, and it has to be secure, it has to be regulated, has to be something that suits the needs of everyone involved, and that is a long, complicated, arduous process. And so what we've decided to do is break it down into individual steps. And so we're building this one step at a time. And just like when you spoke about it at the very beginning, don't wait until your solution is completely designed and perfectly built before you start rolling it out. We actually have to do this iteratively. And so that's what we've done with this project. We've just finished up phase 0. We actually kicked off phase 2 a couple of days ago, or sorry, phase 1 a couple of days ago. So the first thing we did is organize these use case design, and we chose the loan repayment, which is the most urgent digitization use case. Had a joint session among all of the multiple joint sessions among the entire industry to design a common use case that will be rolled out across the industry. And we practiced the integration with a small number of MFIs. Now moving into phase 1, we start designing the more complicated things around the interoperability platform, such as the disputes, the settlement, the fraud, and the regulation. And that's why we've got a great partner like UNCDF on board to manage explaining how this process will work iteratively with the regulators. Okay, and the purpose of all of that is those first 2 steps, as you can see on the far right, those first 2 steps is to understand what are some of the major costs, what is the value associated for the clients and for the MFI of a particular product. Sometimes it's hard to really understand what we mean by an interoperable product until you actually see it. And so that's what phase 0 was about, is understanding the value. And then phase 1 is about building all of the rest of the components to understand the cost. There is going to be a cost to fraud. There is going to be a cost to settlement. There is going to be a cost to disputes. There is going to be a cost to interoperability. However, if we can now understand in phase 1 what those shared costs are, now we have the value and we have the cost, and we can understand what the price needs to be. But there's no point in talking about the commercials of price until you understand the value and the cost. Okay, next slide, please. All right, as I mentioned, we're starting with loan repayments. But loan repayments in the end, Mojiloop would be overkill if we were only going to do loan repayments. There's much easier ways to do loan repayments. But that means when you want to move on to loan disbursements and savings, deposits, and withdrawals, and other products as well, it means you're going to have to build all new infrastructure. And this is about shared infrastructure that supports multiple use cases for fraud and disputes, so that it can be shared not only among the institutions, but among the use cases. And so loan repayments, even though that's what the clients are probably asking for now and first, and is the most urgent need, loan disbursements are actually really interesting from a digital economy perspective, because if we think about how many billions of kyat are being dispersed in cash to MFI clients across the country, the more of that we can disperse digitally, the more that goes into the part of the digital economy, which should be a goal of the government. And is definitely a goal of the wallets and the banks who want that money to stay digital and stay in their deposit accounts or in their wallets. And so from a commercial perspective, the loan disbursements is probably a more attractive use case for the other financial institutions who may be involved. But then obviously one of the main drivers of savings is easy access to your money. And so making sure that we very quickly follow up the loan use cases with the savings use case, we hope is going to be a major driver of savings behavior in Myanmar for microfinance institutions. And then eventually we're even looking at things like, and again, all of this is regulator approval and with and hopefully building it together with them, and if that's what the industry wants. But if we think about, especially in the larger end, if we've got microfinance clients who are entrepreneurs taking a 5 million kyat loan, and they're taking that loan in many cases to make a couple of large payments, they shouldn't have to take 5 million kyat out in cash just to go transfer that money to their suppliers in a bank account. That money should be able to stay digital that entire way. And so that's when we talk about B2B payments. And this is where it's also even more exciting with folks like Easy and hopefully Vision Fund rolling out customer apps, because the clients are then going to be able to manage those transactions directly from their own apps in many cases. And this is the infrastructure that's going to enable those customer experiences to send money anywhere in the country. So again, moving on to others, ATM withdrawals, very, very possible as the next step. Cross-border payments, we all know there are a lot of workers in Singapore, Thailand, and Malaysia who might have relatives who are taking loans from some of your MFIs, and their ability to repay them directly from overseas might be an interesting use case in the future. Okay, so next slide, please. So far, we actually have a large number of organizations committed. And again, this is something that needs to be an industry-owned platform. We're not going to be happy until there are 50 logos on this slide. But so far, these are the organizations that have been committed. Vision Fund and Maha, KB, Hana, Easy, I'd say have really been drivers from the very beginning, with Don and Mifida really coming in and being drivers once the project got going, which we really appreciate their efforts. And then CB Bank and AIA Bank have also both integrated, and we've tested the ability to do a loan repayment directly from their app, with Aredo and MPT Pay close behind them. And so again, just to make it clear, what that means is that if a client of Vision Fund goes to a CB Pay app or an AIA Pay app or an M-Paisan app, their loan repayment looks exactly the same. And it looks exactly the same as the experience that an Easy Microfinance client has, that a Maha Microfinance client has. Again, similar to how most of us take ATM withdrawals for granted. It's the same for any bank, for any ATM. This should be the same for any wallet, for any microfinance institution. Next slide, please. And technology partners, again, so far. FitSworks has been an amazing partner. Musoni, this isn't an advertisement for Musoni, but Musoni has a great core banking system. Has been very easy to integrate with. But we've also had great experiences with Fern, Mambu, FinFlux, and Moracat getting already onboarded, and we've got a few more coming on in the next phase. And then lastly, Opportunities Now has been a great partner and will continue to be even a bigger partner when it comes to the digital financial literacy components of the project. Next slide. So some of the lessons learned. The main thing here is that you need a big vision and regular communication. We do bi-weekly calls with all of the leaders. We hope more of you are on those calls from now on. But we have to be thinking beyond what's currently in the hands of clients and what's currently regulated, because those things are responding to maybe what the needs were a couple of years ago. We have to be thinking much bigger. The next is that we need dedicated MFI leadership, and everybody's been talking about that, the importance of the leadership to be on board with that. But we also need to make sure that others below are also engaged in the project. We have to have some influential champions, and I think I've mentioned some of them across so far, and then the number of champions we have is regularly growing, but you have to start with a core group of about 3 to 5 people, and we were very lucky to have that. Let's see, the number 4 there is important. And this is a quote from somebody in the industry. If you believe in what you're doing for tomorrow, then today you'll need to get your hands dirty. You have to do something. Very often we all make great PowerPoint presentations, but we have to actually roll up our sleeves and start working. And that's what we've been doing with this project. It's been very helpful. The next thing I would say is the MFIs are a lot more nimble and digital ready than most people think. If we're successful in the next 6 to 12 months with this project, the MFI industry in Myanmar is going to show that it moves faster and better than the banks and mobile money companies do. And I think that's going to have great importance for the growth of the industry. And lastly is leaving commercials out, but have a roadmap. We didn't have that roadmap that I showed you earlier at the beginning of the project. We just talked about it. Having it in writing was really important so everyone understands where we're going. But let's not talk commercials until we, like I said, understand the value. So I apologize. I know I speak very fast. Next slide, please. But the last thing I'd like to say is, as we mentioned, this is an MFI industry-owned platform. And so the costs are relatively fixed. If you don't see your MFI up here, please send me or Drew Johnson an email. We'd love to get more of you involved. This will only be successful if everybody works together. So thank you very much for your time, and thanks again for doing this great conference.
Thank you, Mr. Steve Haley, for sharing your valuable insights.